Hello everybody, welcome to the Friday, January 17th price review. So getting started, we are looking at the NASDAQ on the 4-hour time frame. And Wednesday night during the live stream, I said that we would like to see this run down, taking out this low being the 4-hour fair value gap that formed during CPI, which we got that very nicely on Thursday, and then we reversed and then ran higher, taking out Thursday's high. Now, looking at the chart, you guys know that Tuesday we expected this run down, and Thursday we expected this run down. But Wednesday CPI release, we did not hold an opinion. Now, sometimes you will not know what the higher time frame narrative has in store, and you have to wait for more information. So even though at certain times, like right here and right here, our higher time frame narrative was incorrect, we still found runs in price that offered something, because I know some of you guys took this short up here, made money. Some of you guys took this short up here and made money. So even if you would have came into Tuesday, which is where my mouse is right now, if you would have came into Tuesday looking for a bullish price run, you would have gotten smoked. Same goes for Thursday. If you would have wanted to continue what CPI did and you expected bullishness, you would have gotten smoked. So it's important to know where reversals as well as retracements will occur. And that is very important. And we will cover more on that later. So looking more into this price run right here, Wednesday night's live stream, I said that price would likely continue a little bit higher, like it did, until there is either a daily SMT or something of substance that forms, which will give the run lower. So that monthly SMT right here, that was just something tipping its hand. But we needed to wait for something during the lower time frame, which occurred, for that actual run under this low trading into that gap. Now, if you look right here, we have a 4-hour TPD, which formed the high of the day. And then within that, during the PM session and the morning session, there was a hidden daily SMT. Now, it was very, very, very low probability, because I know some of you, a lot of you were asking. There were so many TPDs on multiple different time frames, back to back to back. What does this mean? How do I interact with this? All of that. If you do see that, that is indication of low probability conditions. And that's why this run was so high resistance, is because it was contrary to the trend that we can see going on now. But more importantly, why was NASDAQ the one that returned into the gap, but Dow did not return into the gap? It fell just short of it before continuing higher. And why was the Dow so consolidative? So looking at the actual release of CPI, which this is the CPI candle that I'm highlighting, on that actual release, look at where the Dow is trading above this high. Look at where the NASDAQ is trading, right at the open of non-farm payroll. So we can see that the NASDAQ is substantially weaker for upside momentum compared to the Dow. So that's why NASDAQ offered that deeper retracement into the gap, while the Dow kind of stayed very consolidative and lackluster and didn't really offer too much, because the Dow had already completed its move. The NASDAQ was just catching up to it. And we can take this one step further by observing the 6-hour time frame. So what did I teach you guys about 6-hour TPDs? What do they commonly do? They commonly print pivot points throughout the week. So as you can see right here, the Dow had the strongest up close for the 6-hour TPD. The S&P was kind of in the middle, and the NASDAQ formed the down close candle. So right here, this tells us, even after CPI's release, if you observe this candle and you see how it's down closed but the other two are up closed, this one tells us that the NASDAQ is the weakest out of the three for upside movement. And that's why the NASDAQ offered the deepest retracements. If you observe even the S&P and the NASDAQ retraced a lot deeper in comparison to the S&P, and especially the Dow. So the Dow is our leader right now. The Dow is the strongest. And that is another reason why the NASDAQ returned into the gap, while the S&P and the Dow failed to return into the gap. And what time was the gap made? During CPI. So now we're looking at the 1 hour time frame comparing the NASDAQ and the Dow. I'm pretty much just going to be reviewing today's price action for what formed today. So looking, we can see we have a gap that formed in the overnight session, which I call the overnight session, London session, overnight session. I pretty much call them the same thing, so please don't get confused whenever I say overnight session. Whenever I say overnight session, I'm just referring to the London session. So as you can see, during the overnight session, we formed this fair value gap that whenever the New York session opened up, we priced back into and then continued higher. On the Dow, we left that gap unfilled. So knowing what you know now about Dow being the leader, since we know the NASDAQ is likely the weakest, that's why it will retrace into gaps more often and form bullish SMTs, continuing the current momentum that we have going. And as you can see, the NASDAQ formed a TPD right here. So the Dow formed an up close candle, the NASDAQ formed a down close candle, and price did not respect that whatsoever. Why did it not respect that? Because we know the Dow is the leader, and also we already hit that 4 hour fair value gap. This is the candle that price hit that 4 hour fair value gap. So we made a reversal off of that 4 hour fair value gap and continued the momentum from CPI's release after price had already rebalanced its delivery. And another thing, what did I teach you guys? Since today had no news, what do I teach you guys about whenever you have no news? What is commonly the theme? You will have setups that form earlier on in the session, and then either the morning bell or a little bit before that will make the real move, and then the rest of the day will kind of just be lackluster. So now we're still looking at the NASDAQ and the Dow, but through the lens of the 5-minute time frame. So as you guys can see, that red box right here is the hourly fair value gap, and this gray shaded box is the hourly fair value gap for the Dow. Whenever we tagged in that fair value gap on the NASDAQ, we also formed a 90-minute SMT. So on the Dow, we created the failure swing, and you guys already know why, because it is stronger relative in strength to the upside, and NASDAQ is weaker. So that is what I was talking about. Whenever you know the asset, whenever your price is in a bullish movement, the asset that is weaker is more likely to cause retracements into gaps and form SMTs. So we formed that SMT inside of the gap, and that created the run, offering higher prices. So hopefully you guys found this one insightful. I will speak with you all again on Sunday in the live stream. Be safe and have a good weekend.